Some of the important questions retail investors have been asking about the SpaceX IPO is the data right to go into the IPO? Why all these negative talks about it? Well, here are the numbers. While SpaceX prospectus targets a $28.5 trillion overall total addressable market through orbital data centers, Starlink connectivity, and XAI infrastructure, the pure space sector comprises only a fraction of that figure. At an initial valuation of $1.77 trillion, the company is priced at 6.2% of this massive cross-industry market opportunity, rather than a traditional share of the legacy space economy. This is for a business that generated $18.7 billion in revenue in 2025, implying a revenue to valuation multiple of 94 times, despite accumulated losses exceeding $41 billion US. Will you say the numbers are good looking or not? For context, Amazon went public in 1997 at $450 million at 3 times revenue. Google went public in 2012 at $23 billion valuation at 7 times revenue, and Facebook at $104 billion valuation in 2012 at 20 times revenue. My answer, therefore, is, while SpaceX may be one of the most important IPOs in modern history, the smartest investors may need to think beyond buying SpaceX itself by following the data trail, as it may end up being the least interesting opportunity in this entire event. Because historically, when massive IPOs happen, the biggest gains are not made within the IPO itself. They are made in the ecosystem around it, the suppliers, the infrastructure layer, and the smaller companies that get dragged into the spotlight when trillions of dollars of attention begin flowing into a single sector. Now, that's where it becomes interesting. Because SpaceX is not just another IPO. It is the largest narrative and capital flow event the space sector has ever witnessed. Which means money is not going to move in a straight line, but it's going to spread outwards into ETFs, contractors, launch companies, satellite infrastructure, defense systems, orbital logistics, and very likely into those small cap companies that a lot of people have not even heard of. So today, we're not focusing on SpaceX itself, we are focusing on the economic shockwave around it and where that capital may flow next. I am Kakombo, and you are welcome to the Data Investors Playbook. Imagine you owning a property in an average neighborhood, and suddenly a massive, hyper, luxury, mega project is being built down the street and is leased for a record-breaking price. Signal goes out to all of the property owners that a new class of people will be coming into the neighborhood, causing every one of them to adjust the values of their properties upwards. When massive companies go public, something predictable tends to happen. The market begins to search for related exposure because not everyone will have the capacity to buy the IPO itself, especially when allocation is limited but demand is massive, like this SpaceX IPO, which has just 550 million shares to give out. So capital spills outwards into adjacent assets. We've seen this repeatedly across markets. When AI exploded, Nvidia moved along with all of its suppliers. Data center plays moved, power infrastructure companies moved, semiconductor companies also moved. Some of these stocks are TSMC, SK Hynix, ASML, Applied Materials, and Lam Research. When electric vehicles exploded, lithium moved, battery supply chains moved, charging infrastructure moved. And now with SpaceX, the same process is beginning in the space economy. With a $1.77 trillion valuation, the rest of the sector will likely change. And this repricing process is exactly where opportunity happens. We have literally seen this effect play out with companies within the SpaceX ecosystem in the last few months. Rocket Labs moved to about 100%, Redwire ran up to 210%, AST SpaceMobile 108%, Intuitive Machines 161%, Planet Labs rallied by 150%. Why? Because the market already started pricing the SpaceX effect before the IPO. This is because of the narrative peak that is happening prior to the IPO itself. And this is not random price action, this is liquidity rotation. We are watching money move in real time. And the goal is to know how to follow the data trail to take advantage of these opportunities. Right now, just a couple of days to the launch, the market is pulling back. Shares have cooled off from that initial peak because money is shifting. Basically, during pre-IPO cooling off periods is when long-term investors focus their gazes on. So while the ecosystem stocks are being sold off to raise money for the SpaceX IPO, temporary discounts are being created because should SpaceX be worth a premium, the infrastructure supporting it has to be worth a whole lot more too. So that's the whole idea. So let's see what investors and analysts will be looking at. Some companies have indirect exposure to SpaceX, companies like Alphabet. Google invested $900 million into SpaceX at a $12 billion valuation. And that is about a 5% stake of SpaceX. And with a $1.77 trillion valuation, Google is running away with $88.5 billion. The next company is EchoStar. It holds 52 million shares in SpaceX, approximately 0.4% of its stake at $1.77 trillion valuation. So definitely, investors will be watching EchoStar. Analysts will also be looking at small cap companies such as Momentus that operate orbital service vehicles because it's such a fundamental part of SpaceX operations in orbit. SpaceX builds the highways, Momentus operates vehicles on the highways. Now, this is despite the company being a highly speculative one. That is because small companies tied to a larger narrative can benefit aggressively when liquidity floods into the sector, even if they are not the most stable companies. Then, of course, ETFs. Analysts are going to be looking at ETFs because capital is going to be flowing into space-themed ETFs. And this is exactly how thematic momentum spreads. One company becomes a catalyst, the ecosystem becomes the beneficiary. With all this, there will be a space sector re-rating. Not because the revenues of these businesses change overnight, but because perception around the space sector has changed. And markets often reprice narratives before fundamentals get to catch up. Remember, this is not investment advice, just expanding on the data trail around the SpaceX IPO. So ultimately, this video is not about stock picks, it is about following the data on capital behavior. Because major market events create layers of opportunity, and the most obvious layer gets attention first. But the second layer is often where larger asymmetries emerge. So what the effect of the SpaceX IPO is doing to the entire ecosystem is actually what makes the SpaceX IPO important, despite the negative data, negative narratives around it. Over the next several years, the space ecosystem may become one of the most important emerging investment themes in the world. So, for retail investors, the real question should not be, should I buy SpaceX? The better question may be, where does the money flow after SpaceX? If you enjoyed watching this video, please do not forget to like, share, and subscribe. in order to get our content to more people. As usual, before you invest, let the data guide you. See you soon.